Thanks, Vivek. I appreciate that, man. I'm glad that you're finding value in it. So let me share a little story, a quick story with you guys about my biggest mistake of the year so far. The only reason I want to share this is because, number one, a lot of people don't share their mistakes and share their losses, even though that's where we can find the most value, right? I feel like I've learned so much in every area of my life by seeing what not to do. And the only way for me to show you what not to do in trading is to share some of my mistakes. So we're going to talk about SPCE, Virgin Galactic. It's a stock. I'm going to show you the price chart here in a second. I'll turn my screen share on. But before we get into that, I just want to explain to you what I did because I don't want you to do the same thing. When I trade stocks, I trade them a little bit differently than I trade my Forex pairs. With my Forex pairs, I'm grading the trade A, B, or C, and I'm waiting for a precise trigger signal, and then I'm managing that trade by locking my stop loss and taking profit as it moves at different levels depending on if it's an A setup or a B setup or a C setup. That's semantics for right now. That's explained in other videos. You can go to my channel and search my exit strategy explained. I break it down in very, very close detail there. But basically with these Forex trades, I'm locking my stop and I'm moving my take profit and I'm taking profits as it moves. With the stock trades, I look for good prices, I buy and I hold. I'm going to change that strategy going into the rest of this year and going into next year and going into the future of my investing for me and Riley and our family. The reason for that is because with the stock trades, I've let SPCE become what Peter Brandt calls a popcorn trade. I bought the stock at about $15.95. I took it all the way up to $60, and now I am still holding the bag at $16.18 today. I was in this trade because I believe in the company. I believe in space travel and space tourism as a future, right? I believe in Richard Branson, and I believed in Chamath, who was one of the guys on Twitter pumping this and a couple other SPAC stocks. All the SPAC stocks are red, very red from their highs back in 2020. They've all come down. For what reason? I'm not a fundamentalist, so I can't say. But what I can say is that if I had managed my stock trade like I managed my Forex trade, I would have been out of the trade at $30. I would have doubled my money and it would have been a great trade. But because I was blindly just buying and holding, I'm now back at break even, which sucks. And I don't want you guys to make that same mistake. So what you can do for stock trades, for Forex trades, is continue to remember that you want to be locking your stop loss, mitigating risk, and taking profits off the table. Because you never know how high a stock is going to move. You never know how far a Forex pair is going to run. So it's really, really important to not forecast how far it could go, but react to how far it's gone. That's the key right there. So what that means is on candle closes, daily candles, 15-minute candles, depending on if you're swing trading or day trading, where's the candle closing right now? Should we be taking profit here? Is this an exit sign? Or is it telling me to stay in the trade? So if I flip you over here, we'll look at SPCE on the daily time frame to start. So you can see I ended up buying, actually, I think I have it pulled up right here. Let's go to this one. No, I guess I don't. Okay, so either way, I was buying this last year in 2020 around $15 a share. So right down in here before we made our first pop up over 25. Once we popped to 25, we continued to make a lower high before making that full run here, as you can see, up towards $62 a share. Take this off. As we made that run up to 62, right? When we broke the 8 and 21 EMAs right here, and they crossed down, this would have been a great place to get out, somewhere around $40 a share. That's almost 3x on the money that I put into this thing. I think that's a great place to potentially get out of the trade. It ends up gapping the 50 and moving to the 200. I still held the bag. We're in a downshift. 8 and 21 EMAs are in a downshift, and I'm still holding a long trade. That doesn't make any sense. And I'm not taking anything here. I'm just watching and watching and watching, and now I'm down here back at my entry price. So what you can do to avoid popcorn trades like this is two things. It's super simple, guys. You want to be taking profits as the trade moves. And I remember this little rule that I don't know who taught it to me, but I've remembered it as long as I've been trading. Our multiples are the best place to take profit. Rather than trying to figure out exactly which price a stock is going to go to, if you risked, let's just say $10, when it's up 1R, so when you're up 10, take some profit. Or when you're up 20, 2 to 1, depending on the expectancy of the system. But I think if a stock you buy at $15, like I did, goes up to 20, goes up to 30, goes up to 40, and you don't take anything, you You could say stupid. Maybe I'm being stupid. You could be greedy. Maybe it's greedy. Either way, it's being ignorant at best, at least ignorant to what price is doing once it starts to turn down. So my advice to everybody is just don't let popcorn trades happen. That's what you can take out of this trade from me on SPCE. And I'm hoping that this is going to be your biggest lesson of 2021 so far as well. I think what I could have done better is locked the stop loss on the trade because I'm not trading with margin, only trading with cash, so I can use a stop loss, and move that stop loss as the trade moves. If I would have just been moving my stop loss up as this trade moves, since I bought it, let's just mark it 15 here. That's right. This moves setting structure points. So if I would have just moved my stop loss up, we could have moved it first to here, locking it in profit. Then we could have moved it to here once it moved off the 50. Maybe you get taken out there at 23. It's better than being in still at 16, back at break even. But then when it breaks the 50 right here, that's a great sign to take some profit. It hadn't gapped the 50 in a while, and the 8 and 21 had crossed down. So I think don't be ignorant to the daily time frame when you're trading stocks. And buying and holding is not an investment strategy that anyone should be doing unless you think you're some type of a professional. The only thing I think we should be buying and holding is a money market fund, an ETF that tracks the whole market. And even there, you have to pay attention because if we go bearish over the next few weeks and months, you might want to get out of that as well. So take it from me, popcorn trades suck. I'm grateful that most of my money is in Forex, not in stocks, but still being up from 15 to 60 and now back at 15, it stings, but it's teaching me a lesson. This will never happen again. I will always be locking my stops and I'll always be taking profit. And I'll tell you, I think why I didn't lock my stop here was because I had been burned by an unregulated broker, Kraken, on my crypto trades earlier this year. I talked about that where I was buying Cardano at 30 cents. I wrote it up to $1. My stop was locked at like 48 cents, 50 cents difference. One day, Cardano spikes to 80 cents on all the other brokers except Kraken. Kraken, it spikes all the way to 10 cents and stops me out in profit. So I get tagged out of that trade when I should have been in it. Now it's over $2. I should have still been in it, but my broker, which was unregulated, stopped me out because of poor liquidity or whatever they want to call it. And I think that pain of getting stopped out of a winning trade impacted the decisions that I made over here with SPCE. So don't let that happen either. Locking the stop is always going to be a mindset that keeps you in the game. I was going to say the right mindset, but I don't want to even tell you what's right or wrong. Doing it this way is going to keep you in. I'm still here. 6 years of making videos, 6 years of trading and sharing it and helping people trade. The only reason for that is because I don't take huge losses. So in this situation, I could have made a lot more money, but at least now with Virgin Galactic, I'm not down in the red. I'm able to now manage this position almost as if it never even went to 60. My thoughts going forward with Virgin Galactic, they posted $0 of revenue for Q1. That's a bad sign. I'm going to continue to watch the rest of this week. We're going to see how the overall market shapes out, and maybe I close the entire position and move on. That's really what we're at this point. Because honestly, if it goes red, if it goes down to 10 cents, it goes down to 5 cents, how am I going to feel then? I went from 15 to 60 to 5. You don't want to be that guy. That's the worst position to be in. At least if I get out of break even, I can learn from this and do better going forward. So I want to share that lesson with you guys. I hope it brings you value. I hope it helps you make better decisions going forward. And if you have any questions about what I'm saying or if anything isn't clear, put it in the comments below. All right? Thanks, guys. Yeah.